Hello, my name is Steve Bigelow with the Candlestick Forum. We had some very strong buy reversal signals in the markets and a lot of stocks this past week. For example, the MorningStar signal in the Dow had very strong relevance as far as showing a reversal that the investor or the bullish sentiment is starting to take control. Notice we had a MorningStar signal right here. However, what was the non-confirming situation? They couldn't close above the T-line. Then you had another MorningStar signal. What's the Japanese rice trader's basic philosophy? If you see a candlestick reversal signal in the oversold area and it closes above the T-line, the probabilities are extremely strong you're heading in an uptrend. So the difference in this closing above the T-line was stochastics curling back up. You've already had a buy signal and then another buy signal, this time closing above the T-line. That was definite confirmation that the bulls are taking control. Also, you add the fact that it did it all at the same level where it bottomed out before. That's just that much more confirmation that the uptrend was in progress, followed by a positive open the next day, confirming that it was going to stay up above the T-line. The NASDAQ didn't do a reversal signal. However, the fact that they gapped it up at the T-line and went positive was a pretty good indication that the NASDAQ was confirming with bullish sentiment, basically confirming the Dow. So the strong signals are much more relevant than trying to pick out a sector, because with a market reversal like this, there's a lot of sectors that are coming back up. So the most important factor at this point is finding the signals that are telling you you've got the strongest reversals. The MorningStar signal obviously is confirming with what the market itself was demonstrating, a MorningStar signal. Our recommendation on Roblex was based upon this MorningStar signal, bullish confirmation above the T-line, breaking the downtrend. Remember, a MorningStar signal is one of your 12 major signals, just like the Evening Star signal is one of your 12 major signals, showing HII still in this downtrend, even though the markets are trading positive. Remember, the most important criteria for showing what the investor sentiment is doing is based upon the individual candlestick signals, not what the market is doing. So we saw tons of these type of signals. I say tons, dozens and dozens of MorningStar signals, such as Peloton, and we can dramatically improve the probabilities of our trades based upon the McMuffin pattern. McMuffin pattern is merely a MorningStar signal followed by a doji sandwich, the morning sandwich or the McMuffin. What's the probability factor of this type of signal? Well, we know that if this is one of the 12 major signals, a MorningStar signal, there's more upside. If we see a doji sandwich, we already know what the expectations are, more upside. So you combine the two, that just dramatically improves the probabilities you're in an uptrend. Our recommendation on SNCE is based upon the McMuffin pattern. MorningStar signal, doji sandwich closing above the T-line. Where's your next likely target? Somewhere up here in this range at the 50-day moving average. 2+2 analysis is nothing more than adding up all the bullish indicators in one simple glance to show that the probabilities are pretty strong. That is a good bullish reversal signal. So our recommendation on CPS was based upon a series of dojis. This is where the Japanese rice trader's common sense analysis greatly improves your ability to see when there's going to be a change of trend. Where do most people sell? They panic sell at the bottom. When you see that gap down in the oversold area, the Japanese rice traders tell us start looking for buy signals. When you see a series of dojis, remember, if a doji represents indecision, start looking for a change. A series of dojis represents bigger indecision. And then there's kind of your cradle type pattern, close above the T line, now also followed by a doji sandwich, dramatically improving. Not only is your series of dojis confirming, creating an uptrend, but it's being further confirmed by the doji sandwich, which we know a doji sandwich implies more uptrend. So anytime we can use the patterns, like a fry pan bottom, we know what should occur at the breakout levels. Our recommendation this past week, our special recommendation was HGEN based upon a fry pan bottom classic pattern, which is they pull back, they do a J hook. We know that wave 1 and wave 3 will be approximately the same. Every time we can see a pattern setup, we know the probabilities are not only greatly in our favor, but the probabilities of being in the right direction and in a strong price move are significantly enhanced. So anytime we can see a reversal signal, again, we pointed out that the inverted hammer that we recommended Dave on, that anytime you see an inverted hammer in the oversold area and it trades positive, the probabilities are extremely strong. It's going to trade positive, even if the overall market trend is in a downtrend. Remember, the most important probability factor is what are the individual signals telling you. So the logic is if you're seeing buy signals when the market is heading down, when the market continues or reverses and heads up, it just enhances that buy recommendation. So we're pointing this out because this coming weekend, March 26th and 27th, we're doing a 2-day full comprehensive training on all the logic built into candlestick analysis. That includes identifying the 12 major signals, identifying and utilizing the patterns, classifying them in the top ranked signals and patterns, how to improve your probabilities of being in a correct trade by the entry strategies, when to take profits, how to use gaps in combination with your candlestick signals to dramatically improve the probabilities of not only being in a correct trade, but in a high profit trade, where to set your logical stops and scanning. Also trend analysis, everything that we can apply based upon the common sense built into the graphics of candlesticks. It helps us identify when there's a change of price movements, the big price movement potential, and if you understand the psychology that created the signals and patterns, then you've got a grasp of what makes prices move just with the same equivalence of somebody that's been trading in the market for 50 years. So join us, because the information that you get from one of these training sessions will dramatically improve your investment perspectives, no matter what trading strategy or what type of whoever you're following. You can see much more clearly whether the recommendations of what they're doing is confirming. That'll be it. We'll see you in the chat rooms.